Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary, the stormiest city, I think, in Canada.
It has been that way for on and off, and if you want to see golf ball-sized hail, we have it, or we had it yesterday morning.
And as I was saying to Joseph, you don't need an umbrella in Calgary, you need a catcher's mitt when the weather gets bad.
Well, it's overcast again, so they're talking that we might get some more this afternoon. So,
but as they say in Calgary, if you don't like the weather, wait 10 minutes.
Yeah, well, tomorrow it's supposed to be sunny. I hope they're right. I want to go golfing.
Joseph, if President Trump wins in November, what does it mean for energy and the environment?
Well, he's against, closing the coal-fired industry, and so, that's the difference between him and Biden in terms of what's going to happen. One of the problems, of course, is pipeline approvals. The courts are overruling Trump on everything from the North Dakota pipeline, bringing the Bakken down south, XL pipeline issues, Michigan with the state issues there for, Line 3 and, Line 5 issues. So if Trump is victorious, the question is, where is he with the Senate and the House, and can he get things through Congress supporting his view of, U.S. security independence for energy? He will not do anything on climate change, which, of course, Biden would. He probably will look at a continental energy policy between Canada, United States, and Mexico if there's any problems in the Middle East, and he's walking away from military adventures in the Middle East. So it's a difference than what Biden would do. Biden, of course, would go pro-climate. He'd go back into the Paris Accords. The thermal coal industry would be dead in the States. They'd probably close the remaining coal-fired facilities in the next decade, which is what Obama was planning to do. And you'd probably be looking at, more taxes on the industry, maybe not getting tax deductions like they have right now. So if Trump wins, then I think the question is, when does the COVID-19 virus end, and then we see an economic recovery, and we probably see higher oil prices. On the other hand, if we see the environmental climate stuff go with Biden, then probably the natural gas sector would win more than the oil sector, because the oil sector would probably, especially the heavier barrel oils, would be impacted by the taxes that we would see for CO2 emissions. So it's a totally almost 180-degree view of the industry, as we get past COVID, depending upon who wins between Trump and Biden.
Maybe a lot of Canadians aren't aware as well that Canada makes money on U.S. coal because the U.S. coal that's shipped to Asia can't go through American ports, so instead it comes out of Vancouver and heads to the Far East. So Canada would be adversely affected, too, if they shut down all the coal.
Yeah, I think that thermal coal would be an issue because, of course, Biden would not want to see the emissions, because of the big coal industries in China, India, Japan, etc., where the Canadian and U.S. coal goes to. But I would expect that metallurgical coal for steel industry, etc., would probably continue. But there's a lot of thermal coal in the United States that still is produced. And even some in Canada. So, again, which party wins will impact those industries. And, I would think that a big bounce in the coal stocks if Trump wins, and demise of many of them if Biden wins.
Is it possible to make steel without coal, coking coal?
Well, you got Nucor that uses scrap steel, so you can create steel from scrap steel. But again, you need, there may not be enough scrap, and in many countries where steel is big manufacturing, India, China particularly, they use a lot of the coking coal and then use the raw materials to create steel. So it's big jobs and big employment and of course big infrastructure builds for those countries, and they want those jobs internally versus the Nucor steel plants which are using scrap. I don't think there's as much scrap in India as it would probably be in China, but I don't think you can have all mills just to be the Nucor style, which use scrap steel. You need raw materials for a lot of them as well, simply because there wouldn't be enough scrap around.
I was wondering, can you use forced oxygen to get things hot enough for steel? But again, I'm no expert here. I think I've pretty well blown it when I asked about coking coal.
I'll pass on that one too. It's not my area. It's tough enough trying to be a specialist in the energy sector, the oil and gas sector.
We'll have more with Josef Schachter right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're chatting with Josef Schachter. Josef, what's the story with oil storage? Has it filled up, but prices are going up anyway? And if they are, why, if it's full?
Well, U.S. storage went up last week, 4.9 million barrels to 537, and overall stocks, including, all distillates and propane and all the others, went up by 8.8. So we've seen continuous builds in U.S., even though OPEC's cut back by 9.7 million barrels. But going to August 1st, which is very close, a week away, they're going to bring back 2 million of that 9.7 to 7.7. So there's going to be a build in inventory. And what's problematic is demand is backing off. Last week, for example, the EIA data that came out on Wednesday showed U.S. Demand fell by 826,000 barrels a day from 18.5 to 17.6, and gasoline demand fell, from 98,000 barrels a day to 8.55 million barrels. So the lockdowns that have started again are knocking off demand. At the same time, inventories are building, and then you go into August and you have 2 million more barrels coming on. And then part of the reason the strength of oil's gone to the 41, 42 level is China was importing about 12 million barrels a day, and about 2 to 3 million of that was going into the Strategic Petroleum Reserve, and they bought that oil in April, and it was arriving in shores in June and July. So they filled up their storage, and it looks like the SPR could now be full. So their ongoing demand will only be for commercial purposes. So you've got increasing of 2 million barrels a day from OPEC, declining demand in the United States from shutdowns, declining demand from China for the SPR, and I think we're going to see lower prices coming, especially starting in August, September, and September we're past the summer driving season, so demand drops by another million and a half barrels. So when you put it all into account, I think September, October we're looking at lower prices, sub US dollar $30 a barrel, and we've been recommending to our clients to be cautious. Don't chase. If they've made a lot of money from the March low, if they bought during the when we sent out our action alert buy, then they should consider taking some profits in non-taxable accounts and wait on the sidelines for the next great buying opportunity, which I think would be either late October, just before the U.S. election, if it looks very nasty and very close, that could impact it. And then potentially tax loss selling season in December could be nasty. And again, we need a virus cure. And if we don't have one in the fourth quarter of this year, that again is a negative to it, because most of us will still be at home or not socializing to the degree we did pre-COVID.
We'll have more with Josef Schachter right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Josef, we've had a few companies report their second quarter earnings in Canada, Suncor and Cenovus. What do these initial results look like?
Well, they haven't been, very good. The big issue is the price has gone down. WTI, oily companies will report very bad results relative to natural gas companies. For example, in Q2 of 2019, crude oil, WTI, was $59.85 US a barrel. In Q2 of 2020, it was $27.85, so it's down 54%. WCS at Hardisty went from $49.20 US to $16.35, down 67%. And natural gas is the winner. AECO was $1.05 a year ago. Now it's $2, and we're in the $1.80 range right now. So the natural gas producers, I think, will be doing better. The oily names will probably do worse. And so we had two reports so far. We had Suncor and Cenovus. Both of them reported losses, which was expected. Both of them showed that their debt loads went up. For example, Cenovus's debt from year-end of December, went from $6.7 billion to $8.1 billion. Equity went down from 19.2 to 17.3 because of the losses. And in the case of Suncor, long-term debt went from 12.8 to 15.9. And the equity component went from $42 billion to 36.5. So we're looking at losses going through the books. The companies, are all saying April, May was pretty tough. June got better when we had the prices moving into the high 30s, 40s. But if we back off into the 30s or lower, these companies will go into cash flow loss positions again, and that will be the big issue for them, is that they won't be making a lot of money, and with their balance sheet as bad as it is, just for example, going into Cenovus, they lost money on their oil sands production, $274 million. On their conventional, they lost 48, but the refining and marketing was profitable, and that's really, they did well, $61 million. Suncor was the same thing. They did very well on the refining and marketing side, but they lost money in the conventional business, and that's something that we're going to see probably on a regular basis now, is numbers that are going to be positive for the R&M and negative for the tar sands or oil sands. For example, the oil sands for Suncor lost $1 billion versus making $1.56 billion. R&M, they made $269 million, down from $765. So the overall loss was $614 million versus a profit of $2.7 billion the year before. So you can see how the downstream is making the money, while the upstream, anything over $35 makes the money, anything under 30 loses the money. And again, I'm in the camp that expects we may see sub 30 again, which would be harmful to the companies. And of course, given their balance sheets and their high fixed cost nature, the stocks probably will back off. So names like Suncor and Cenovus are ones where I think there's material downside. And again, just look at where they were in March. I think that's probably a good target for potential long-term investors to take another look. Suncor today is down 54 cents to 22.50. It was down at $14 when we were at the low in April. And so you're looking at downside that could be material for them. Synovus is today 24.48 range. It was down at 9.80. So you can see how these stocks have very high betas, and when the price of oil is 40 plus, they're doing very well. Price of oil's below 30. These are the stocks that get hammered pretty hard.
Joseph, what's new at the Schachter Energy Report?
Well, we've been looking for new ideas for our subscribers, and on the domestic side, we're going to see the Q2 results and see if any names pop up. But we did add in our July report that came out on Thursday a new international investment, which we think is very attractive. It's a Brazilian natural gas story, which has just brought on new volumes and is got lots of exploration upside. The exciting thing about Brazil is they get over $5 US or close to $7 Canadian per MCF, and we're looking at $1.80 in Canada. You're looking at $1.70, something like that for US. So it's a very lucrative market. They're short natural gas in the country, and so they import, and so it's a very nice position to be in. And so that name is one we've added to our research list, and we're looking for more names. We think the international side is going to have some great opportunities. In past cycles, we've had, Centurion Energy. We've had a number of other companies that have done very well, and we're looking for more and more names. We do cover some names right now, like Canacol, Gran Tierra, Touchstone, which has been a star. Touchstone made some very big discoveries in Trinidad, and the stock is one of the darlings of the last year, where it went from 20-30 cents, and it's was up to $1.20 this week on an announcement of larger reserves for their last discovery.
You're having a webinar on August 13th. What's the deal?
Well, we do a quarterly webinar for our subscribers, and we do it in the evening and it lasts about 90 minutes. And what we try to do there is spend time first on what's going on with the market, and why we think that our view is we are right now being bearish, and why we think that's going to come together, and we go through all the fundamental data with them. But then we go into issues of the companies that we think are very attractive, and ones we think that on weakness, when we get the next buy signal, that people should be buying. And we'll go through a lot of the Q2 reports of the companies we cover. We cover 28 companies. We won't do them all, but we'll cover the ones of note, those that did better than expected and those that did worse. If they're oily, they're probably going to have more problems than the natural gas side would. And so we'll go through the best of the best ideas so that people can have a shopping list for when we get the next low-risk buy signal, which we think is going to happen in Q4 of this year. We had one, of course, in mid-March, and then the market popped, and the index went up. The S&P TSX index went up 150%, and many stocks that we cover went up 2, 3, 4 times. So it was a very lucrative period up to the early part of June, and then we said listing is ahead of itself, take some profits. And now we think that this market has some downside vulnerability. And once we get to the lows, which we think could happen in anywhere between late October and tax loss selling season, mid-November to mid-December, that there'll be some great buys out there, and we're just going to highlight to people in that call. And then also we have time in the call, a webinar for people to put in their questions, and we answer, some of the subscriber questions at the same time. So it's a pretty, lengthy call, 90 minutes, but it does cover quite a lot of territory, and it's been very informative, and we're getting record attendance from our subscriber base because, of course, energy did well from March to June, and, of course, we've been cautious now, and so people want to know why we're cautious and go into the details and then go into understanding which stocks to do homework on, so that they're ready to be buyers when the next great buy opportunity comes, as we mentioned during Q4.
Where do you see crude prices at the end of the year, and what's your forecast for next year?
Well, right now I think we're sitting around $41. I think we're going to go down below 30 sometime the next few months. I think September is going to be nasty, October, and then we'll see where we are with COVID in terms of likelihood of an early vaccine in early 2021, maybe earlier for the frontline workers in the healthcare industry. But when is it available to you and I? I think that's going to be the more critical issue for us to change our patterns of activity. In terms of the price, I think we'll see maybe 42 to 43 at the high end. I think we'll see sub 20 on the low end between now and year end. I think we may see November, December prices recover, maybe back to where we are now. And I think in 2021, if there is a virus vaccine, then we could see 60 to 70 on the high end and maybe 30s on the low end. So the second half of 2021, I think it's likely we will see a resolution of the COVID vaccines, and also for the mutations that we're seeing right now for the coronavirus. And I think we'll probably be looking in the 60, 65 at the end of 2021. So from where we are now, stocks will be higher at the end of 2021. But if we have a significant correction in the fourth quarter, it's probably astute for individuals to wait it out and wait for the bargains to come again, which we think will be at significantly lower levels than the prices that they can see on the board today.
Joseph, what kind of bow tie are you wearing right now?
I am not. I'm wearing a golf shirt.
No.
And I'm encouraging myself to be able to play golf tomorrow. So, sorry.
Joseph, always fun chatting with you.
Thank you. My pleasure as well. And if anyone wants more information, they can just go to our website and get information about the product. Thank you.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.